Good morning. Welcome to Stock Market Today for Monday, June 8th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today, where you can sign up for a free email where we get a lot of the content for this show, as well as give you daily stock ideas to consider. Hits your inbox every trading day before the market opens. So I hope everybody had a great weekend. Let's dive right back in on a Monday morning. First, a quick recap as U.S. equities were higher in Friday's trading on the back of the May payrolls report, which saw the economy add 2.5 million jobs in the month. Estimates were calling for a loss of 7.5 million. All sectors were higher on the day, led by continued strength in the cyclicals. We saw energy, financials, and industrials really outperform. Treasuries were weaker with the curve steepening. The dollar was stronger against the yen and the euro. Gold finished down 2.5% or so, call it 2.6%. WTI crude was up 5.7% on the day for Friday, heading on the heels of that report. So as we get to the desk this morning, futures are up 40 basis points after that strong showing last week. Asian markets were higher overnight, with Japan and Taiwan leading the charge. Hong Kong and Greater China lagged. European markets are mostly lower, but the downside appears to be limited. Treasuries are unchanged to slightly weaker at the back end of the curve, and that's a trend that's been in place for a couple of weeks now. Gold is up 90 basis points, WTI crude up 70 basis points, and that's on the heels of OPEC Plus agreeing on an extension of production cuts and the Saudis raising prices. So with that as a backdrop to start the week, let's look at the chart of the S&P 500. We saw a massive upside surprise to that non-farm payrolls report, which sent stocks higher on Friday. You can see the gap here through the 3150 level. So as we think about it here, you have to consider the February highs as being in play. The Qs, the NASDAQ 100, the QQQ ETF, did trade at a new all-time high on Friday. Should we begin to fade from here and start to think about near-term support in the 3,000 to 3010 area? Below that, 2850 to 2950 starts to become important. What's interesting, though, is those pullback levels, should they be reached, would keep the structure of the uptrend off the March 23rd lows pretty much intact, right? It would still constitute a series of higher highs and higher lows, your textbook definition of an uptrend. So those downside support areas would keep the trend intact, would keep the odds towards an attack on the February highs. Now, we are overbought in the near term. Chaikin money flow is bullish. We saw a hard bullish spike towards the tail end of last week, especially with that big rally on Friday. So the indicators are, call them mixed, right? Solid money flow, but overbought in the near term. You have to start thinking about, where the market could pull back if it was to kind of honor or begin to honor these overbought conditions, while keeping in mind that the initial pullback levels would very much keep the structure of the uptrend intact in the short term. So that's kind of where we are looking at the market. We are above the 200-day moving average. You can see that 200-day moving average is right around 3007. So, that's where this initial support zone comes back, and then you start to bring some gaps into play for the lower levels, but that again leave the structure of the uptrend intact for the time being. Let's turn to our market in a minute now. What are we writing about in the note today? Well, positive surprise in that May jobs report sent stocks higher. Again, as I said, we saw the gap higher in the SPY, right? We're going to take a look in a little while. Small caps continue to outperform. The NASDAQ hit an all-time high, right? And shifting away from equities, we've seen commodities rise and treasuries fall as investors begin to price in the prospects for better economic growth. Kind of in line with that theme is the dollar has been under pressure, and it's nearing a key level to keep the uptrend in place. Now, should that key level break, to me, that would add fuel to this kind of cyclical rotation, this trade that points to better economic growth. So dollar weakness would provide a tailwind, in my opinion, to some of the recent strength that we've seen in commodities. As I drill down on the individual equity sectors, comm services sports the best power bar ratio of all sectors that we track here at Chaikin Analytics, and that one looks interesting to me. And as I said, futures point to a higher open here today. For the major indices, from a power bar perspective, we've seen a skew now back towards the bullish side of the coin. Even the Dow, which was lagging in that regard, is back to a bullish ratio, 5 bulls to 3 bears after a 3% plus rally on Friday. S&P a little over 2.5%, 116 to 44 bulls to bears there. NASDAQ, 36 to 3 bulls to bears. That's a 12 to 1 bull to bear ratio. For the NASDAQ. Small caps outperformed again on the day, 778 to 197 bulls to bears. Now, rotation into a more risk-on type environment, rotation into the cyclicals has sent bonds lower, prices lower, yields higher. Bonds down 71 basis points on Friday. Energy was the best group, up 7.5%, but still no bulls in that group. 0 bulls for 10 bears. According to the Chaikin Power Bar, small cap stocks, large cap stocks were bullish. Major indexes across the board are mixed, but the main ones that we look at are all skewing towards the positive side of the coin today. Now, I said comm services had the best power bar ratio. So given that, I wanted to drill down on the group and see if there were any interesting opportunities in the space, especially in light of the fact that the markets are overbought, right? Qs are overbought, SPY's overbought, IWM's overbought, everything's overbought. So I wanted to look for some leading names that were not overbought. And Netflix comes to mind, right? Netflix, ticker NFLX, has a bullish Chaikin power gauge rating, is in a strong trend above this rising long-term trend line. Strong industry group. The entertainment space has been strong of late. So as I kind of roll it up here, I have a bullish stock that's outperforming with bullish money flow and is oversold, right? Oversold as it pulls back to test support around the $400 mark. I think as long as this $400 level holds, this can only be called a consolidation within the context of a rising trend. And Netflix kind of looks compelling to me as a potentially bullish idea, right? Especially in light of that oversold condition for our indicator with the rest of with the rest of the dynamics that we look at. All kind of lining up, and Netflix being a part of that comm services group. We'll take a look at that chart a little bit later on, and I'll show you what I'm talking about from a power bar perspective. Taking a look at the sector tracker now, and the movement of the major sectors over the last 5 days. That cyclical rotation very much evident here in the near term as well, right? Take a look at the top 4 groups, right? These are your cyclical areas of the market. These are also the areas of the market that took the biggest beating on the downturn, so they are seeing a big rebound. Energy, financials, industrials, and materials, that's your cyclical rotation trade. Those are the groups that stand to benefit the most if this rotation continues to play out. And we've been highlighting it for the past couple of weeks now. Now, in fairness, our main focus has been on the stronger of the groups, and that's largely been the materials from a kind of an ETF rating perspective and from a power bar perspective. And what I'll note is that the materials now have a bullish ETF power gauge rating. Industrials is neutral. Energy, neutral minus, and financials are still bearish. Towards the bottom of the list, right, your Utes, that's your risk-off type area. Your staples, risk-off type area. Healthcare, more defensive. We've been talking about healthcare, and it's kind of waning leadership of late. Turning now to the industry in focus, home builder services. And over the past 6 months, this group has lagged slightly. Underperforming the S&P 500 by a little over 1%. However, look at that power bar ratio for this industry group. 9 bulls to 0 bears there. Very strong. Number 1 of 21 subsectors, right? So we look at sectors, then we look at the subsectors. And it's moved up 12 slots over the past week. Some of the indicative names there with bullish ratings: Taylor Morrison, TMHC, Lowe's, LOW, and MHO, MI Homes, all with bullish ratings. And remember, this group looks at more than just the builders themselves. It kind of drills down on the entire supply chain. And if we take a look at the chart, we can see a bullish rating. There's that ratio, strong trend above the rising long-term trend line, beginning to outperform in the middle of May with bullish money flow. The only real issue here is that the fund is overbought in the near term. It's just something to keep in mind. A lot of markets are overbought. They entered last week overbought and continue to rally. but we remain in an overbought condition. But as always, we want to identify the areas that are holding up the best. And we can make the case that home builders are holding up well if we look at this relative strength against the broader market. Let's hit what's trending now. The winner side of the board, Oxy, APA, and MRO are all kind of rallying as the drillers are rallying, oil's rallying. Some of the shale players are talking about bringing wells back online. So that's lent a bid to the group. Oxy up 33%, APA up 23%, MRO up 17%. Beyond that, you kind of have the reopening type trades playing out with the cruise lines. You're seeing it in the casino stocks also. Royal price to convert. That stock was up 20%. Carnival went along for the ride. That stock up 16%. Loser side of the board, Staples coming under pressure. That's hurt Clorox here, down 3.25% on Friday. CBOE, didn't see anything company specific to drive that one down 3%. A little earlier in the week, there was some volume data that was released. Akamai, nothing company specific there. Had been a strong name, maybe part of this rotation, some money coming out of the recent winners and into the more beaten down areas of the market. Same goes for Vertex, VRTX, still with a very bullish rating. Newmont, gold's been under pressure here in the near term as that safety trade has come off a little bit. Newmont down a little over 2% on the day on Friday. So let's take a look now. We talked about those leaders, names like Oxy, APA, and MRO. And here's what we're seeing, right? We're seeing crude rebound. Big rally. This is a blended contract, so it's not really showing you the negative prices. But remember, crude oil went negative. Seen a big rally here. That's aided the drillers. Higher prices get the drillers to start to bring some of their wells back online. So crude oil rallies, now above a rising 50-day moving average, but still below a declining 200-day moving average as it looks to fill this gap from back in March that started the downtrend. Right now, it is overbought here in the near term, but take a look again at those drillers, XOP. Right, this is the group that's benefiting from this rebound in the price of crude oil, and you can see a steady uptrend here. Notice how the group actually bottomed out ahead of crude, right? Again, solidifying stocks as discounting mechanisms, in my opinion, and continuing higher here, went to a brief consolidation and now resolving to the upside. So continue to watch crude oil here for improvement in some of those cyclical areas of the market that we've been talking about. This is very much a data point in that rotation, a data point in that trade that if you're paying attention to what we've been talking about for the past 2.5 to 3 weeks, should be on your radar screen. And at the same time, treasuries have come under pressure, right? It appears that investors are pricing in potentially better growth dynamics for the global economy. And what you've seen here is after a big rally in treasuries that sent yields lower, then some volatility in the market, tried to consolidate, and now moving to the downside. Taking out the 50-day moving average, still very much against above the 200-day moving average. But again, if you are paying attention to this rotation trade, if you're participating in it, right, if you're taking the signals that you're getting and managing your risk, this is one of the data points I think you're looking at to give you a clue if that rotation is likely to persist. Now, what I will say is we're getting close to oversold here in the near term on this sell-off. So we'd look for some support to start to come into play in the 118, 119 area for IEF. But you can see the move higher in yields as investors begin to price in better growth dynamics for the economy. And certainly we got a strong data point to that regard on Friday with that non-farm payroll report. 2.5 million jobs. Estimates were for a loss of 7.5. The job number beat estimates by 10 million. I mean, that caught everybody by surprise. There's just no two ways about it. There's no other way to say it. And then finally, I said we'd look at comm services. You can see the group here. I think as long as we're above $52, this group has to remain on your radar screen. Here are the power bar ratios for all the sectors. You can see comm services at the top of the list, 10 to 0. RSI moving higher. And then this is relative to the SPY holding above support. So when we drill down, we look at the strongest areas of the market, and then we look for individual ideas. That's where Netflix comes from. So that's it for today. Take us for a test drive. Have a great Monday, everyone. I will be back with you tomorrow.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.